Well, the industrial stocks were enjoying a solid year until this week's disappointing manufacturing numbers. That took a sizable chunk out of the sector's gains for the year. Industrial heavyweights are now facing rising inventories and deteriorating demand, but there are some bright spots. Let's bring in Ann Duignan. She's managing director and machinery equity research analyst at J.P. Morgan. Our Seema Modi is here as well. And Seema, real quickly, have we seen pretty much the whole sector kind of thrown out, so to speak, this week?
Yeah, so for the week, the industrial sector is down nearly 5%. It's the large cap names like 3M and Caterpillar, and even those that have high exposure to the farm and agriculture industry. There's been new channel checks from UBS, among other surveys, that show that farmers are becoming much more cautious on how much they want to spend on big machinery. And they're also becoming a bit more concerned about what type of aid they will receive from the U.S. government in 2020, and therefore are pulling back on how much they're going to spend on these big goods that, again, a lot of these big companies, from Caterpillar to Deere, which already cut production at 2 plants in Iowa and Illinois, really rely on.
So, Ann, Deere is one of your only underweights, and this sounds like it has a lot to do with it. What do you need to see in order for Deere's outlook to brighten here?
Well, first of all, we have to resolve the trade issues with China. As you can imagine, U.S. soybean exports to China came to a standstill last year, and the longer that those trade tariffs remain in place, the more likely it is that U.S. farmers face structural changes to their export markets. And we've been saying that for about a year now, and I think we're beginning to see it show up in farmers' hesitancy to spend. I think the other issue for U.S. agriculture, though, is also the strong dollar. Corn is not impacted by the tariffs, but corn exports are down 66% year over year in the last couple of months. So wow. Corn has been really negatively impacted by the strong dollar, and soybeans by the tariffs. So we've got a number of different issues facing U.S. farmers that could be structural in our view.
I mean, that sounds pretty bad. I'm curious, for Caterpillar, you are overweight there. I assume they still have some dollar headwinds like Deere is grappling with. But why do you think Caterpillar is better positioned?
We like Caterpillar. It does not have any U.S. agricultural exposure, obviously. Mm-hmm. It's more a global mining play. And in our view, as long as global GDP is growing, albeit slower, then demand for commodities continues to grow and spending continues to grow in terms of capex by mining companies. So slow growth, yes, a multiple of global GDP, yes, but still growth that we can lock into our models. So we prefer Caterpillar.
Sure. Are you spooked by what we've seen in the manufacturing surveys, or do you just think it's priced in?
I think at this point it's probably priced in, though we are seeing and hearing all the end markets that you just mentioned up front. The truck industry, we got orders last night down 71% year over year. You talked about the agricultural equipment slowdown. We talked about construction peaking and maybe beginning to roll over. So we've seen U.S. oil rigs slowing. So, we're just seeing broad-based slowdown. And so we think that the ISM is probably going to get worse before it gets better, and we think it's going to be very difficult to pick winners and losers going into third quarter's earnings, and hence we think this is one of the quarters where you might want to wait and sit on the sidelines.
Yeah, and if that's coming from the analysts covering this space, I'm paying attention. You do have an overweight also on Eaton and Oshkosh, but like you said, there's only a couple there. Seema, also just given Ann's comments about, frankly, how bad it sounds out there for agriculture, I'm just thinking, how does this play politically into next year? We're talking about an incredibly distressed farm economy that had been a bastion of support for the president and even for his tariff policies.
It's such a great point, especially states that are politically important to the Trump administration that also have heavy exposure to manufacturing and industrial production. We're talking about Illinois and Wisconsin. You got to watch the unemployment levels there, and also surveys that do check the health of U.S. factories. That, of course, could be pertinent to that discussion, especially as we head to 2020.
Yeah, no, it seems like I didn't really. I mean, when you're talking about some of these numbers down that much year on year, it's only we haven't even wrapped our heads around, I think, the true damage that it's done. Ann and Seema, thank you both today, and Duignan joining us there along with Seema Modi. Appreciate it very much.